Thanks for everyone who's come and joined me today. It's a pretty interesting day. I'm looking at the market map, the market screens here that I've got, and I've got to say, after a pretty rollicking start to the session, things are starting to go and roll over a little bit. And I'm not surprised because when I look at so many of the charts, whether you're talking about indices, whether you're talking about what's going on when it comes to FX, particularly when it comes to gold and the like, there's lots of really, really interesting price action going on right now. And maybe not everything is as good as it seems. And we'll touch upon that in just a moment. As a reminder, I want this to be interactive. I love to get questions coming through. So please, on the system here on YouTube, please send your questions through. Anything that comes up, I'll endeavor to go and answer. Remembering, of course, that it is only general advice in nature. Without any ado, let's go and get straight to it. I want to go and kick off with what's going on when it comes to ASX 200 SPY futures, because they're in the death zone, as I describe it. So if you look here on the chart, anything above 8,000 has definitely not been the kindest of friends to bulls of recent times. You can see here, evening star, or bearish inverse hammer if you want to go and call it that. And I've got to say another evening star here. And then have a look at what we're looking at right now. You can see on the screen, opened up really strongly, took out the record highs here on ASX 200 SPY futures, and then look at what the price is doing right now. It's not a great sign, I've got to say. The price is to go and close right down near the lows or something similar. The shooting star is not a good signal when you're talking about for the bulls out there. Certainly for the bears, if you're that way inclined as well at the moment. But when I'm looking at that, I'm not liking the early price action at all. I want to go and see this big bullish bar. Otherwise, the bias might start to go and swing around to the downside. Right now, when it comes to what we're looking at, you can see here, RSI 14 remains in a solid uptrend at this point in time. And you've had MACD confirm the bullish signal at the moment. So momentum is clearly with the bulls right now. But from a price signal, and given what we've seen in the past around this death zone above 8,000, as I liken it, to the death zone in Everest, really tells me that, that there's some problems here if we can't go and extend this move towards the latter parts of the session. So keep a close eye on that. When you looked at the bottom though, it's pretty clear the price has been very respectful of the 50-day moving average. You can see here that it's bounced off it pretty aggressively earlier in the week. And you can just see, the price action, every time it got down towards that level, it just went and bounced back up. So that will be the first downside target if this ends up being another topping signal, as we've seen so many times in the past. Look, it'd probably be amiss of me not to go and cover gold, because it got a lot of attention last night and extended the move earlier on today. And then it really hasn't managed to go and kick on with it. And maybe it has something to do with what's going on when it comes to this trend line you can see at the top. Let me just go and get the chart all organized. So from a momentum perspective right now, you can see RSI 14 has broken this downtrend. You can see MACD has confirmed the signal. And just the price action, I went and wrote a trading view idea late yesterday. And at the time, the gold price was sitting about here. And I just said, looking at what's going on the price action, you can see it's been coiling up. So the record highs, coiling, and then more recently, you can see these big downside wicks, every dip below bought, and then all of a sudden, bang. And you can see this trend line. Now, I just went and drew it in because it's between the two latest record highs, and you can see, lo and behold, it stopped dead at that figure right now. So today's high is actually where that level would be. So in the near term, that's your first level of resistance to go and keep a close eye on in my book. But you can't deny that the bullish breakout, really strong move as well. So we'll see when it kicks on. Coincided, of course, with the ECB interest rate decision, but I think it's more than that. You also look at what's going on when it comes to the US dollar softness right now. You look at what the latest monthly budget deficit in the United States was as well, well above expectations. I'm not surprised to see gold is rollicking around now. If it's going to go and pull back, well, the former record highs will be the first port of call. Then this very minor uptrend that the price was expecting over the course of recent weeks, and then you start getting down to more significant levels. You can see here uptrend dating back to the lows in June, and you can see here also that corresponds with where the 50-day moving average is right now. So gold, very bullish move out overnight. Not quite so convincing at the moment, but I wouldn't read too much into the price action right now. Being in Australia, let's go and have a look at iron ore, because when it comes to the ASX 200, one of the other key inputs, of course, is the iron ore miners. And we need iron ore prices to start having a rock and roll time to go and get those bid to go and join the banks, which we know are extremely rich in terms of valuation relative to historic norms. Yeah, it looks like we've bottomed. That's the good news if you're a bull. You can see here the wicks below are 91 early this week. All bought. And you can see RSI 14 had broken the downtrend. That's now been confirmed by MACD. So the bullish signal has now been put in place. And you can see right now, 95.40. It's actually just smidgenly above that at this point in time. That's a level that the price has been very respectful of going back, not only in the recent weeks, but also going back to earlier this year. So to me, if we can go and get a foothold above this level here, there's every possibility that this move could extend further. And you can see here, the downtrend dating back to, I know, the late May highs, rejected, 50-day moving average as well is capping gains. So to me, that would be the first logical target. If we can get above here and hold there, then maybe up here around about 99 bucks is the level you want to go and keep a close eye on at this point in time. But certainly lots of bearish stories out there about iron ore. Indeed, I saw one of the mainstream news networks leading with the business stories about how it was going to go and fall into a heap. And I thought that was probably the low. And lo and behold, that was that day right here. Let's have a look at WTI crude, because it's another one that's been in the wars recently, but things are starting to look a little bit more promising from a technical perspective. You can see this bearish breakout of a long running uptrend support really sowed the seeds to this downdraft that we'd seen previously. Again, any rally sold into, that was this day here in particular, was when OPEC Plus went and announced that they were going to go and delay the planned increase in barrels coming back to market by a couple of months. And the bears, rightfully so, in my opinion, just said, nah, and smashed it back lower. And you can see here, around $69, the price did a bit of work either side of that. Went through, and then eventually broke through, and then retested it, and then we saw that move down, the flush down to 65.26. But then the price action since then has been a little bit more constructive. You can see here, dips below 66 have been bought, and you can see maybe that's gone and setting the emphasis to this big bullish bar that we saw print on Thursday. Now, the fact that we're now above $69 might be able to go and provide a base for some of the for the moves that we'll see here, and potentially we could go and see an extension of this move back towards first port of call will be 71.32, and beyond that would be this key downtrend, uptrend that was broken. So right now, just for information purposes, you can see that's around about 72 bucks to keep a close eye on. And Chris and Caroline, thanks for the message coming through. I'll give you all the questions and answers section towards the end. So I haven't forgotten you. I'm just going to go and get through some of the charts right now, including having a look at Aussie yen in a second. Let's have a look at Aussie because that's an interesting one at the moment as well. Yeah, not threatening the highs that we saw that was struck in August, but it's certainly had a good week. Some correlation analysis that I've done on that certainly looks at it's getting very, very responsive to what we're seeing when it comes to risk appetite out there and iron ore and WTI. So that's why I was looking at those charts in particular. You can see the price action this week. So through the 50-day moving average initially, rejected at that, and then it flushed down to around about 61.20 or so, where the 200-day moving average is lurking as well. And you can see that big bullish reversal. Back, importantly, closed above the 200-day or the 50-day moving average, sorry, and then probably made this possible to go and kick through. After we saw a reversal back through again, a retest, it snapped back, and then look where we've gone to hit this downtrend. It's only a minor downtrend, only been touched a couple of times, but right now that's the area that I'm looking for at this point. The bias is definitely bullish at this point in time, but I've got to say that I want to see what happens here because from a risk reward perspective, on a daily time frame at least, I'm not convinced that there's the risk reward is there to go and take a long at this level, especially when you've seen this level has already rejected the other move once. From a momentum perspective, RSI 14 has been broken convincingly, hasn't been confirmed yet by MACD, but that's moving higher, so it's starting to go and get towards that level where it might go and give us a bullish signal. But right now, the bias is higher, but I'm waiting for the price action to come to me. 67.50 on the top is a level to go and keep an eye on. It's been done a bit of work either side of that, has gone through and reversed back. So just be careful if we do see a break higher. Make sure that it goes and closes there. That would make me feel more confident about a long trade. If this is a rejection here, then potentially you could go and look back to 66,857, the 50-day moving average, and then below that, this zone around about 66.20 or so. Let's have a look at the NASDAQ. Actually, no, what we'll do is we'll do quickly, have a quick look on the weekly time frame for Aussie yen. This is for you, Chris, out there at the moment. As a reminder, I need to go and put up this disclaimer very quickly. Anything that comes through from me is general advice in nature. It's not taking into account your personal circumstances, and this will apply later on for any other questions that come through. So just a quick reminder, that's the way. I'm not considering what circumstances that you're asking the question under. When it comes to what we're looking at right here for Aussie yen, yeah, it's pretty clear cut. I don't mind it as a charting vehicle. You can see here, broke this uptrend really convincingly here, and then 98.70-ish. You can see here that the price was a former high, respected, then finally went through and then broke, and then on the way down, you can see here. There's also been some work here, some tested. They tried to go and push it through. It did go and manage to go and close above it at one point, but then you can see big bearish engulfing candle coming through. Indeed, that's a key reversal. So the price action right now, it looks to me, unless it goes and manages to go and reclaim this uptrend, it's a sell on rallies prospect, in my opinion, right now. At this point, the weekly candle is not giving me a definitive signal one way or the other. But at this point, you can see here that history suggests that if it gets back up to around about 98 or so, it'll be sold. If it manages to go and break through and close above that, then potentially we get up here. From a fundamental perspective, I'm doubtful we get back there. It's going to take a really unique set of circumstances, a really big unwind in the Japanese yen, a lot of strength coming through in the US dollar. It's possible, but the circumstances that led to this big rally here earlier this year were unique. And I'm not sure we're going to go and get the same scenario coming through, even with the prospect of rate cuts from the Federal Reserve. Let's have a quick look overseas. I want to look at the NASDAQ because it's sitting at a really interesting level on the charts. I went and wrote about this yesterday on the research porthole for the website, so I'd encourage you to go and have a quick look at that. But certainly when it comes to what's been going on with the NASDAQ, let me get to the right time frame. You can see here that earlier this week, false break of the 200-day moving average. You can see here, reverse back higher, and then dips towards the 200-day moving average were bought, and then Bushka, up we went, and it managed to go and close above 19,204, which is a level that's the price has done a bit of work around either side in recent weeks. To me, that was when the bullish signal there for a trade, and you can see here it's gone up and it's now testing this key level. You can see not only is it key because the downtrend itself is not that important, but I'm far more interested in the fact that it's a downtrend with the 50-day moving average, which we know the price has been respectful of multiple times in the past. So you can see here on your screen, that to me, so what happens next is going to be really key directionally, in my opinion, when it comes to the NASI. You can see, if it was to go and break higher, 20,026, 20,371, and of course the record highs around about just under 21,000 other levels to consider. On the downside, if we were to go and see a reversal, 19,204 is the first level to keep an eye on, and you can see here the 200-day has been pretty important. That will be the next target, and below that, 18,387. The bias very much is higher at this point in time, in my opinion. You can see here when it comes to breaking RSI, the downtrend, that's really convincingly, that bullish signal has been confirmed by MACD. So if we can get a foothold above this downtrend and the 50-day moving average, there's every chance we're going to see an extension of this move moving forward. Let's have a quick look at SPOOs, E-mini futures, S&P. Not quite as definitive as the NASDAQ in my opinion, but there are some positive signs starting to emerge. You can see here, this is only a really minor level. So I drew this trend line in earlier this week at 5396.75, and you can see the price action broke through there really convincingly earlier this year. And then when we saw this sell-off, that's where the price stopped and bounced from. So to me, that became a minor level to go and consider. And then earlier this week, we saw that there was a move down and didn't quite get there. And you can see that, boom, straight back higher. And then the two subsequent sessions, big downside wicks, bullish signal, and then it took out that 50-day moving average, which you can see again, the price has been very respectful of. It's tested it on multiple occasions over the course of this year, but doesn't always go through. And the fact that it went through, and then just to go and top off the trade, the long trade overnight, you can see the price came back down, kissed the 50-day moving average, and then bounced, and then took out this next level of resistance at 5584.75. And the volumes are not being shown on the chart, but I can say that the volumes have been decent as well. So there's a bit of impetus behind this move. I know there's a lot of people who are looking at the 0-day to expiry options, particularly around NVIDIA, but the price action is explaining a lot, in my opinion. The last thing I want to have a quick look at on the charts before we get to a quick look at the Fed is what's going on with dollar yen, because just looking at it right now, I got to say it's the one ointment, the fly in the ointment right now that could really go and change the behavior of this session when it comes to risk appetite. As we saw in early August, a big unwind. It was very disorderly in nature, and it really created a massive risk-off event almost out of nothing. Now, it's not really the same fundamental backdrop now. This is more about the rate cuts coming through from the Fed and the pricing, which is driving this move. But realistically, right now, we're seeing that there's quite a big move coming down, and we're approaching some pretty key levels here on the charts. You can just see death cross, and the prices just kept going. RSI 14 remains in a downtrend, and you can't really see it here because there's been such a big move, but we've just seen MACD confirm the bearish signal again as well. So when you go and look a bit to what's below, I've got to say there's not a lot of levels. So you can see 142.73 is the first one that I'm keeping a close eye on. You can see this level here as well, just below 140, which was the low earlier this week, is the first immediate target. Below that, 142.73, because you can see that was the low that was struck in late December last year. And then when you go back from that, you have to start going back a long way. And when you look at the price action, well, 138 is a level the price did a lot of work either side of back last year. To me, that would be the first target. And then you've started going back even further than that. The thing that is slightly concerning is that whilst there's not a big risk-off tone in markets at the moment, what I'm looking at when it comes to yield differentials, which we know are such a key important driver when it comes to a dollar yen, they are sitting at levels now that we haven't seen since around about August of 2022. Now, to give you some insight as to where dollar yen was trading during that particular time, it wasn't at low 140s, it was back around here. It was much lower. We're talking about high 120s, low 130s. So you can tell that if there was to go and be some selling, or maybe see some, particularly when it comes to riskier asset classes, the combination of compression of yield differentials with losses in some of these assets that carry trades have been funding could spell trouble. So at this point in time, I want to go and emphasize that that's not the base case, but you've got to have that on the radar as a trader, because that's one of the risks at the moment. And it's interesting to watch right now as we're speaking. Japanese yen has fallen below 141, and you can see the Nikkei is starting to respond. And you look at what's going on with some of the other asset classes across the region, the bullishness that we saw earlier in the session is starting to go and wane a little bit right now. Let's turn our attention to what's going on with the Fed. So for us here in Asia next week, it will be the early hours of Thursday morning that we'll get the decision. For those of you listening in North America, of course, that will come through Wednesday afternoon. So this is the Fed Funds Futures curve, just looking at a variety of different timeframes as to what's priced in. So you can see here at this point, this is for September pricing. Now, overnight, we saw the PPI, the core PPI came out a little bit hotter than expected at 0.3, like the core CPI session earlier. But then Nick Timiraos, the Wall Street Journal journalist who is thought to have an ear as to what the Fed is thinking, of course, came out with just pretty much what the market's been deliberating for the past couple of months as to whether the Fed will do 25 or 50. And it's had a big impact. You can see 36 basis points of hikes of cuts, I should say, are priced in for the September FOMC meeting. Over the course of 2024, we're now back to 117 basis points. So there's only 3 meetings. That means that at least one is going to be a 50 with the risk of another one, unless the Fed goes nuclear, it has to go and deliver like a 75 or a big one. To me, that would be under really trying circumstances. But that's really punchy pricing coming through, I've got to say, over the remainder of this year, particularly with some of the data that's been coming through of late. You can see here when it comes to over the next 12 months, 230 basis points of cuts of price. So that would go and take the Fed funds futures, Fed funds rate, I should say, back towards where the Fed signaled neutral policy rates, the long run average. And just to go and a reminder of this, so this comes from the US Federal Reserve. A lot of people would go and see this in the past. It's the dot plots, but it's the numbers behind the dot plots that come out. You can see here, they had 2.8% as the neutral rate back in June this year. So to me, I don't think there's going to be much change when it comes to that, but there's going to be some changes when it comes to the Fed funds rate, when it comes to the pace of cuts coming through. I want to explain what I'm looking at right now. So the unemployment rate at the end of 2024, back in June, the Fed thought they would be sitting at 4%. Well, it's not at that level now, it's higher, it's 4.2%. So immediately we know the Fed is hypersensitive when it comes to the prospect of the labor market and not wanting to see any further deterioration. So right now, it's already above that. It's where it was expected to be at the end of 2025. So the risk for me is that potentially this gets revised higher, this gets revised even higher as well, which potentially could go and sow the seeds for the Fed to go and add to rate cut bets coming through. Real GDP, things are looking pretty good at the moment, so I'm not sure whether potentially we might go and see another upward revision to what we saw, particularly when it comes to near-term expectations. And the core PCE deflator, it's already sitting at 2.6% at the moment as well. So when you combine that with what's going on with the unemployment rate, there's likely to go and be more than just one cut signaled when it comes to the next dot plots coming through. So to me, I think the Fed will signal 3. So 75 basis points of cuts. And I think the profile is going to be a little bit more steep. So what they had here is 4 for 2025 previously. So in that case, then that's only 5 out to the end of 2025. To me, it's more likely that they will probably maybe keep this unchanged. Add to that, so they're going to signal that they'll have 7 cuts out. Now, potentially, they could go even more. Based on what we're seeing when it comes to the PCE deflator, there's a risk for me. The 7 that they'll go and signal out to the end of 2025 is that they might go and signal 8. And the reason is because if the neutral rate's at 2.8% and the Fed funds rate is currently in the range between 5.25 to 5.5%, it's in really, really, really restrictive territory, at least based on what the Fed's estimates are. So in that instance there, it would suggest that if it's already seen that full employment's at risk, undershooting on the inflation targets at risk, they might go and be pretty punchy. It also increases the risk, I've got to say, potentially that we could go and see a 50 basis point cut. Now, the market's pricing in around about 11 basis points, so it's still around about a 40-60 split when it comes to that prospect. Most people still favouring very marginally that'll be a 50. Excuse me, as my screen decides to flicker off. But to me, at this point in time, it's really not going to be something that potentially would be that unusual. The messaging would have to be from the Fed that it's not because there's some kind of massive deterioration in the economy. Jerome Powell would have to go and sell confidence to the market. So instead of the market getting all panicky, he has to come out and say, the reason why we did this is to go and get in front of the curve. We feel confident about the outlook for the economy. We feel confident that the labour market can remain strong, but we want to go and protect those gains to go and deliver a 50 basis point cut. To me, it is very, very close because even with a 50, policy rates are still going to be very restrictive. I know that some people are concerned about the message it would go and send and the like, but realistically, what would be worse? Saving face and trying to just do it slowly and then watch the unemployment rate go and jackknife higher potentially, or maybe go a little bit aggressive earlier so you have to be less aggressive in the future. So to me, that's the risk that I know, even with 11 basis points, look, it's a really close call. The markets are priced that way, but there's grounds on either way. You want to go and install confidence, 25 potentially, but will that go and get people concerned that you're going too slowly? To me, a 50 with the right messaging sounds all right, but we'll each to their own and how they go and relieve that. Look, there's plenty of other things out next week as well. There's also things like US retail sales. We have the Bank of England monetary policy decision. We have the Bank of Japan decision, although neither of those central banks are likely to go and move, in my opinion. What I'll do now is I'm going to put the disclaimer back up on the screen. If anyone has any questions they'd like me to go and answer, I'm happy to go and answer that right now. So I'll put this up on the screen, give you a few seconds to go and come up with any ideas. Please shoot them through on the chat functionality when it comes to YouTube, and I'll endeavour to go and answer them for you. I can't see anything coming through. So with that, I might go and wrap up and say thank you for joining me today. Always a pleasure to go and talk to you out there. If you have any questions, please get in contact. And of course, get in contact with the City Index team as well.